Hello, good day, everybody. Welcome to our session today. My name is Bernard Wanyama, and I'm delighted to have you on the call with us. Today, we'll be previewing our practical risk-based IT audit masterclass that will happen sometime in the middle of September. And we'll just use this opportunity to show you a bit of what we shall cover, and also perhaps to get some feedback from you regarding what is relevant to you and what some pain points are from a practical sense. So I'll get started right away and give you an overview of what we're going to cover today. We want to take a bit of demographics to hear from you. Then we'll get a view of our fictional or fictitious client, the auditee, the company that we shall be auditing, called Send Cash Quickest, which is a fintech that does cross-border money transfer, and it's based on cloud architecture running on AWS. Then we'll look at some of the drivers for our audit activity, and then we'll also look at how to approach the audit planning and risk-based scoping so that we're able to ground the audit activity around some very important or very relevant activities. So we have a poll that has come up. If you could answer just to get a sense of who you are, what role you're in right now. Some colleagues are from internal audit or IT audit. Some are from cyber and information security. Others are from risk, compliance, and privacy space, while we could have executives or IT ops or engineering colleagues with us. Okay, so right now, I think we'll move to the next poll. All right, let's move to the next one. Can we show the results of this? It's been 60 seconds, so it's evenly split. We don't have anybody from the board or executives or consultants. We have IT audit, cyber, IT risk, and IT ops. All right. So moving on quickly. The second is about pain points. The hardest part of an IT audit for you. What's the hardest part of an IT audit for you? Is it deciding on what to scope? What do you put in and what do you leave out? Is it getting the actual evidence out of the cloud, the infrastructure, the different teams that you're working with? Is it being able to test controls that you don't fully understand? Or is it on the other side of report writing and engaging the senior stakeholders to get the level of seriousness that these findings and recommendations deserve? All right. It's 60 seconds, so let's show the results. Okay, 40% is on scope. Another 40% is on extracting evidence out of the cloud or DevOps, the teams or the infrastructure or whatever sources you have to work with. And then 20% is on testing controls that may not be fully understood by the auditor. Okay, so let's move on quickly. So the idea here really is that we're always going to have an IT audit that is driven by a process. Audits tend to be procedural by nature. They tend to follow a certain mandated process that is agreed upon by stakeholders. And so you start from an audit charter that establishes your audit mandate within the organization or within the business. Then you have the audit universe, the things that you're going to care about and want to pay attention to and use as input or interactions or tools for your audit exercise. But then you also have the scope that you want to focus on from time to time. Some audits are scheduled annually, while others are going to be ad hoc. Others are driven by change in the environment. It could be external. There could be legislation or compliance requirement that comes up. There could be an incident that has showed up and heightened the risk in that area, and management and the board need audit to focus on that and give them assurance around that area. It could be a project transformation within the organization that then triggers audit activity. And so there's always going to be a lot of directions from which the push and the pull comes, and the need to be dynamic, the need to stay focused on the risk, the need to stay grounded and apply the principles that will allow the organization to go through an audit and then receive valuable, actionable, positive, and life-changing impact as a result of that audit. That's got to always be, I think, our focus at the end of the day. There's always so much work to do. There's always so many concerns, but at the end of the day, we've got to be able to speak to the heart of the matter and be able to drive positive change and contribute to the bottom line of the organization. And so risk is what we talk about all the time. Everybody wants to talk about risk, but we've got to be able to find what that risk means in the language that everybody understands. And so we tend to anchor the definitions and the ratings and the concerns around what the business expects. We've got to speak the language of the business. We've got to find and appreciate the pain points and the concerns of the different stakeholders who contribute to the well-being of the organization, and then use that to drive our audit activity in a way that speaks to the needs of not just the visible or present stakeholders, but also those who might not have a regular visibility, but still carry important weight in this process, the governance, risk, and compliance process. So you might have internal stakeholders, but you also have external stakeholders. And you'll also have those who are silent, like the public or clients who might not interact with you as an auditor on a day-to-day basis, but their needs have to be put first in everything that organization does. And then some organizations have different power structures depending on whether you're private or publicly listed, whether you're government driven or you are totally in the private sector. There's got to be an understanding of where and how the different power dynamics are interacting. And a great auditor is one who understands which stakeholders have to be managed in what way and aligns with those expectations to deliver an independent and valuable assurance around the key IT and technology risk, governance, and compliance issues for the organization. So we have two sides to this. You could say many of us start from the left, where we have an audit that is by the book, and maybe we are doing our job the way we are taught how to do, but that kind of falls short and does not sort of hit the target when it comes to what our stakeholders expect and how audit reports and audit findings are received in the organization. And so sometimes you're going to have to align with the stakeholders that you have and understand them better, but also being able to understand the culture of the organization and the industry that you're in allows you to navigate the different pitfalls that will be hindering or creating a risk of failing to meet expectations or failing to give a value for the organization that you're serving as an auditor. And so the client really holds the power in all this. The key to understanding and delivering a great audit is always going to be about what the client expects, what the stakeholders expect, and how they receive and process and act upon information that you have given them as an auditor in whatever engagement that you're doing. And so scoping is always going to be what matters. You got to speak to the concerns and the language that the business expects. And sometimes the business is not just a single executive that's mandating the audit at the board audit committee level. There could be other stakeholders that keenly follow that audit. It could be shareholders themselves. It could be regulators. It could be key clients that are interested in certain governance, risk management, privacy, or whatever other concerns that you have in the organization, and are using that to determine the kind of relationship they'll have with your business or your client organization going forward. And so there's got to be a sense of understanding what your stakeholders are really expecting and being able to bring that to bear in whatever work that you do. So we shall be working with the Fintech organization as our fictitious auditee. The name I chose is Send Cash Quickest. I hope it could survive in the market and be remembered by a potential client. But it's ideally a fintech organization that does cross-border money transfer across a global span of customers. And so in this case, we are talking about its primary customers being based in the Middle East and Africa regions, as well as Latin America. And so you have millions of customers. You have a mobile app that is servicing those customers, so they are mobile first. They've built the business around P2P payment that is instant, and so the velocity of cash, the velocity of value is high. You have wallets that store value, and so in any case, you could think of this as a bank or a neobank or whichever type of language is applicable. But in this case, it's a digital bank that is going to have its premises on cloud infrastructure, and it's going to aim to serve all the customers that it can onboard across the globe. And so you have this kind of feature. In this case, we are talking of maybe 4.2 million registered wallets and 180,000 transactions a day, averaging at $240. The technology on the back end is cloud-based. In this case, I've chosen Amazon. You have containers, a DevOps process, and constant releases. You have different third-party vendors that you work with to deliver the service. You have KYC vendors. You have card processing, forex liquidity, SMS audit, OTP, mobile money rails, and most of these are specific to different countries or different geographies. On the assurance side, stepping out to look at how the business has tried to be compliant and raise standards around its governance, risk, and compliance. The organization has been recently ISO 27001 certified. They are on the road to getting their PCI DSS certification in line with the fintech business that they do, and that will be kicking off the next quarter. On the shareholding side, they have a group parent company that is registered or listed on the US stock exchange And so the Securities and Exchange Commission is imposing quite a number of requirements on them around cyber governance and disclosure of cyber incidents. And so that just paints a picture of a typical organization trying to cover the different bits around the business, the technology, as well as the governance and compliance environment that they'll have to work with. So this sets us up to explore a few interesting areas that will always come back to the kind of organizations that we are working with, and we'll have a familiar face, a familiar sort of set of challenges that we have to navigate as auditors working through this. Again, if you have any questions, kindly put them in the Q&A. I'll be happy to take them. Feel free to put your questions in the Q&A. I'll be happy to speak to them as we go along. So diving a bit deeper into our FinTech organization, we have the primary surface for end users or customers is the mobile app, iOS and Android. It's bound to a device. So if you lose your mobile, you have to go through a process of registration. That kind of stops people from taking over accounts very easily. There's going to be a linkage with the physical device, but it also creates another risk that if the physical device is stolen, then perhaps you have a bigger issue. Then you have internet infrastructure that speaks to the mobile app. In this case, there's an API that is exposed by Amazon Web Service to handle the mobile application. And then in the back end, you have containerized microservices to deal with the different functions and business processes. You have a core ledger that is database-based, and that's what's running the bank at the end of the day. And then on the other side, you have your partners, your vendors and third-party service providers who support with different specific technology, cards that could be Visa, MasterCard, or any other, card provider. You have mobile money vendors across different markets, especially in emerging markets. You have KYC vendors who approve identity and onboarding and validation of identity for your clients to ensure that you are in compliance with anti-money laundering and combating of terrorism financing and all the other high risk and high impact regulatory exposures that you have when you are moving money across the globe at such a scale and such a velocity. So on the other hand, looking at how this comes to be, the organization has continuous integration and continuous development. They're using a DevOps process, which is really baked into the Amazon Web Service infrastructure. And so they're able to fix bugs, introduce new features, test new features, and optimize their application quickly because of automation of the development process and speeding it up through a DevOps kind of architecture that they have built. So it's DevOps and cloud native, if you could put it that way. And so they are married or committed to the cloud on a long-term basis. And in this case, if they've chosen a vendor like Amazon Web Service, then that is a significant exposure and commitment to a single vendor and technology. And so they have to evolve and work with that vendor, and the cost of change might be quite interesting. But that's a strategic decision that they make as a business, and they work with that. On the identity and access side, you have the customer side identity, which is very important to ensure that the right people get access to their wallets and are able to work with their transactions without repudiation. But of course, you also have your internal identity and access management for your employees and other humans plus non-human or machine identities that need to be authenticated and need to carry out different processes within the fintech. And then fraud and detection of fraud or nefarious activity is a key thing. In this case, you're going to be a target. Every time you open up the financial service, it is very clear that you have pinned a huge bull's eye on your back as an organization. And so the key attraction there for whether it's cyber attackers or even insiders or third-party vendors who work with the organization, you're going to have risk of fraud or illegitimate access to customer wallets for financial gain. And so there's going to be a key requirement to stand up fraud detection and anti-fraud infrastructure, not just the infrastructure, but also the processes and an approach that is evolving and is dynamic enough to speak to the risk that you have as an organization. So that's the picture of the environment that we shall be working with. And of course, as we go in, we shall have samples of what the infrastructure looks like. We shall look at an Amazon Web Service environment that mirrors this, and we shall be looking for artifacts that can speak to evidence and testing of controls that an auditor would expect in such an environment, whether you are looking at the Edge API, or you're looking at things like the microservices, or even just being able to look at the identity and access management layer that is critical in a world of cloud where there's no firewall, and the only firewall or the only perimeter that you now have to work with is identity and access management. And so we'll have this kind of infrastructure that is staged to then allow us to conduct a few key tests around those controls that we expect to give us a sense of how that can look like in the real world. So in this case, we are working with three key drivers for this organization. Remember, it's a fintech, it's a neobank or a digital bank. And so we are looking at three key things. One, privacy and data protection. And again, this is just my initial assumption that I'm putting the case study. We have personal data crossing borders. We have compliance and legal requirements that are coming up every other day. So many countries are now coming up with very specific and very far-reaching privacy and data protection requirements that must be complied with. Compliance is not optional. And you also have a cloud estate that is based nowhere in particular, but across the entire world. And so you have to work with a situation that exposes a lot of your data potentially on a global basis, and you're tracking hundreds of countries' data protection requirements, not just the top level data protection, but also banking type data protection requirements. There's AML and terrorism financing requirements. There's restrictions around digital applications, restrictions around Bitcoin or any other wallet technologies that you may have to navigate. Certain countries are pro-Bitcoin, others are against crypto or any other type of digital wallet. So you have a lot of legislation on one side that is driving this kind of pressure on the organization. And you also have the good old cybersecurity pain point that is really a key issue right from the board right up to the end customer or the end user who needs to be concerned about cybersecurity on a day-to-day basis. Then the actual damage where things get bad and people get hacked is when wallets are drained and frauds are perpetrated. And so you might think that maybe fraud or scams are covered under cybersecurity or information security, but as a sort of a very specific area of focus for this kind of organization, you will find a risk that stands out on its own and requires specific attention. And so in this case, wallet draining or fraud or theft of funds from such a fintech bank requires very specific focus if it is to be combated. In this case, we are looking at it as a key issue that's targeting these organizations, and then therefore requires a kinetic or a dynamic response that must be, elevated very highly. But again, this is what the organization looks like. Different organizations have their own different pressures, and so it's very important to be able to understand what the organization is going through at that particular point in time and how it's going to be able to respond to that particular pressure. Any questions or comments as we go along? Please feel free to share in the Q&A. Okay. We have a Q&A. I'm just checking. Okay. So in this scenario, we are looking at a common and very high impact risk that organization or the fintech can suffer from. We previously said that the organization has millions of customers. In this case, we have 4.2 million registered wallets and 180,000 transactions a day, and the average transaction is $240. Now, we've seen digital banks going down quickly because of the rate at which customers themselves are able to withdraw their funds in a bank run. But we've also seen targeted attacks on digital wallets that drain millions of dollars in a very short time because the attacker has found a way to bypass the security measures and is able to quickly exfiltrate funds out of the organization. And so this kind of risk that we're looking at here, the frauds and scam risk, can actually bring down the organization then before we get round to complying with privacy and data protection and SEC requirements or GDPR requirements. There's going to be ever-present risk of the bank being compromised and wallets being drained and the losses being too big for the organization to bear out of such a scenario. So looking at where this might come from in an example of how do we get a wallet drained, you might have it originating as a SIM swap, where the OTPs are based on SMS messages that are sent to a client's registered phone number. So that phone number might be attached to a SIM card and it might be swapped, or there might be an attack where the OTPs are intercepted at a telco level before they reach the end user, or at a time when the end user is not awake or not paying attention to their phone. And so in this case, your partner or the risk owner, the control owner, the entity that you have to work with is the telecom company or the aggregator that you're dealing with, one of your partners. You might have credential stuffing at login a typical cybersecurity attack. You might have a new device being swapped out. The customer might change their phone, or somebody might change the customer's phone, and in between there, you have issues. You might have a beneficiary who's added quickly, and funds are sent out to a strange country that you've never been. You don't have anybody you know, maybe in Uganda, and your money has been sent to a country that you've never even visited or never had a friend from. And so in this case, people go out to buy crypto, buy subscriptions, or even just transfer the funds and exfiltrate them out as cash through dangerous places where you might not even be able to contact law enforcement and have any serious action being done. Raising of transfer limits, small transfers that go under the radar or are not tracked. They don't ring or trigger any alarms. They are all within the limits. Or you might have cash out on a partner rail where you have a trusted partner that you use for cashing out, and in that process there's a loophole that allows money to be drained from maybe your suspense account with them, or even a one-sided or one-legged account without reflecting on your main ledger. And so there's many types of financial fraud, but these things happen, and we have to be able to speak to them and understand the dynamics around them. We might not be experts at fraud or fraud management, but we must be able to appreciate the risk that this comes with in an IT or a technology environment where the organization is using technology to deliver money transfer or banking services. So, as an IT auditor, what are your top 2 concerns out of this? Again, you might have a very specific concern that is not even listed here. You could put that in the chat, but let's give it a shot. What would be your top 2 concerns here? I hope the question allows us to answer, to choose top 2. Okay. Identity and privileged access across AWS and the ledger, change and release management in the pipeline, the DevOps pipeline, fraud detection and transaction monitoring, data privacy and cross-border data flows, third-party rails and vendor dependency, incident detection and response and disclosure readiness. All right. It's been 60 seconds. I'm just gonna show us the results. Okay, most people are concerned about fraud in this fintech scenario. Then we are tied for identity and access management, privileged access. We are tied for change and release management. There's also a tie on data privacy and cross-border flows. And then third-party rails and vendor dependency, there's a tie there. And then we have incident detection and disclosure readiness coming in last. All right, so I think these could be coming naturally, or they could be coming with experience, but let's look at it this way. Again, most of us picked up fraud, and then I think that was I was able to predict what would be top of mind for you, because maybe for myself it's also top of mind. Identity could also be another area, but privacy is driven by a regulator. And so in this case, we have our own expert-driven and experience-driven concerns, but also what then has to come out is that whereas these are where we start from, we have to apply a sort of filter and test our scoping so that we are able to scientifically arrive at something that the client actually is concerned about. It might be a global concern. It might be a real issue in the industry. It might be something that you've seen before to have devastating impact. But we've got to bring it up for discussion and allow it to go through the process and say, where do we have this documented? Where is it coming from? Is it just our instinct, or are we able to speak to a certain requirement or a certain mandate or a certain issue, certain evidence that we can point to and remove the instinct or the gut feeling or the experience that we come with, and so that we're not biased to our own experience or our own concerns, but we are actually aligning with what the client is actually suffering from or what their pain points are. So we must have that alignment step through filtering. What's the business risk that this is mapping to? And maybe this also forces us to go deeper and say, what does the business look like on a real analytical basis? Are we quoting things from the entire industry or from related businesses, or have we taken time to understand this particular business that we're going to audit and how it works and what their issues are, having seen the concerns that are documented or put to the front by management. And then lastly, it's the question of prioritization, the choices that you make. When you choose the top three, when you choose to prioritize, there are things that you leave out. And what is the reasoning behind the things that you have left out? Why have you chosen C and maybe we didn't, we gave C the first ranking and maybe 2 and 3? Because the board audit committee will ask you what's driving our priorities, what's driving this risk-based plan. So we must be able to convince them as stakeholders that our risk assessment or our risk-based scoping is in line with what the business is going through, what the business is exposed to, and what the business is expected to deal with from maybe a regulatory and compliance perspective. And so there's always got to be the time when you take your gut feeling, take your instinct, take your first choices through a process of alignment and ensure that you can answer key questions and you have confidence that these areas that you've chosen are what actually matters for the business. And so it's an interesting process. It comes with different dynamics, but at the end of the day, we've got to separate what people are feeling, even our own feelings, from what is the reality or what is required, by taking it through a scientific process that can help us to arrive at evidence-based or evidence-backed and relevant and well thought through choices that also justify why other concerns may not be prioritized at this time. Okay, I need to check in the Q&A if we have a question. Okay, Ringsoon says A and E. Okay, all right. Thank you, Ringsoon. So as part of our audit, we realize that the organization or this fintech is aligned with, or they have chosen and taken up the NIST Cybersecurity Framework 2.0 to drive their cybersecurity governance and risk management activities. And so our basis for examining the controls, our basis for assessing what risk is there in the environment and how well the organization is performing risk management is going to be anchored around one framework, key framework. This is the NIST cybersecurity framework. And the reality is that most organizations will choose and align with one or more frameworks that they're comfortable with. It could be historical, it could be by choice, it could be an industry initiative. And so as an auditor, you've got to be conversant and able to recognize, interrogate, and work with different frameworks that organizations typically choose. So we might have the NIST CSF and the ISO 27000 as the primary frameworks. In this case, we are being told that also on the road to go for PCI DSS certification because they are a financial services provider. But also you could have certain areas where you are talking of things like COVID 2019 or whichever next version of COVID you have to deal with. But the point here is that organizations will work with frameworks, they'll work with standards, they'll work with different kind of processes that could be mandated by the parent company, they could be mandated by the industry that they're in, they could be mandated by the country they're in, where, for example, in some countries, it is now very important to have an ISO 27000 certification to demonstrate to the public that you are taking seriously information security as an organization. And so you got to be able to look at the framework and the standards that the organization is choosing to work with. You could make a commentary on the framework, but sometimes it's not our place during an audit to speak to the framework itself, but we want to work with the real risk through the framework that the organization has chosen, and then be able to assess and make recommendations on how well that framework and its set of artifacts, whether they are the standards, the processes, the controls, and different other tools that you may have within that framework, how well those are contributing to risk management at the end of the day, looking at the requirements of the stakeholders and the organization. So it's going to be that kind of thing, and we've got to have a very good understanding of these frameworks. So my recommendation is that we always have to invest in learning and becoming skilled at these frameworks so that they are able to give us mileage as we perform audits, but also give advisory services to clients who need the kind of expertise that comes from auditors to enable the organizations go forward in terms of governance and risk management. So the other side of things is that this organization has a parent company that is listed on the US Stock Exchange and is therefore subject to Securities and Exchange Commission compliance requirements. In this case, the SEC requires cyber disclosure, and you need to, as an organization, you need to have an annual risk disclosure, but also you need to have a per incident reporting in case you encounter or suffer a material or major cyber incident. Within 4 business days, there must be reporting that is done to the SEC. And so this could tell you about where the organization is sitting from maturity. It could tell you about where it is sitting from the kind of regulatory exposure it has, because if these regulatory requirements are not met, there is the regulatory risk that catches up with the organization. So beyond, for example, if you had a cyber attack and you did not report it according to this requirement within the days that are stipulated, on top of the impact of the attack itself, it could be financial loss and downtime and other things. The regulator themselves are also going to create or put sanctions on the organization because they have identified a regulatory or compliance requirement that has not been met. And so the risk kind of adds up over and above the initial cybersecurity issue that you're dealing with. And you have to then also deal with the regulator as another secondary or second or third order impact arising out of that risk. Of course, we have different geographies, so you might be dealing with European DORA or NIS2 or different other countries, their central banks or their financial regulators coming up with specific regulations that need to be upheld, and you know, the pressure is only increasing, if you could say that, because as we go forward, many countries and many territories are adopting more and more stringent regulations around financial services, around cybersecurity, around privacy, around you know, information security. And so there's going to be more and more pressure on the organization for regulation, not just the actual controls that protect the data and the resources in the organization, but also being able to do the paperwork and demonstrate to regulators that you are actually compliant and that compliance is adding value. Right, so here we're looking at a situation where we have a control gap that must go right to the board of directors. The audit committee must receive this finding or this observation and be able to act on it in a way that they understand and the way that will give back value to the organization. It starts with a control in a key process of the business operations. We have something called a transfer limit on a wallet. So a wallet and its transfer limit. And there's a process for raising it. And you require a change window, for example, to raise it. So this is the finding. It's a small thing. Okay, it's very specific in this example, but the impact can go all the way. So looking at this control gap that has been identified, you speak to what it can result into if somebody went ahead to do all these things in a bulk way and then created a situation where 10,000 wallets have been impacted over one weekend when people are not monitoring and people are not in the office. What does that mean to the business? So you go from this possibility, this control gap, then you go into what the incident might look like in terms of exploitation of that gap, then what then the business impact results into. So you have a refund liability, you have to refund your customers their monies when these accounts have been, their wallets have been depleted through a transfer limit that has been raised without them being notified. You have regulators in 9 different countries that must be informed about this and notified according to their requirements. You have your customers walking away and leaving the organization, going to competition because nobody wants to do business with an insecure company or an insecure fintech. Then the board has to take responsibility because according to the SEC, the board has ultimate accountability for cybersecurity. And so something that looks like a small bag or a small gap results in the board taking accountability and facing sanctions for such a small or such a minor bug or loophole within a wallet transfer process. So what I'm trying to paint a picture here is that we should be able to go from observations to how they evolve into incidents, into business impact, and what broader governance consequences or implications will look like. At the end of the day, if you are not able to escalate an issue from what you have found on the ground or in a process or in a transaction scenario to where it impacts the entire organization, then you got to look at it differently. And so this is really the test that we have to put our findings through to ensure that they're able to speak to the stakeholders at different levels, but also drive action, because if we don't raise them as auditors, well, the attackers will raise them. So the auditor will be proactive in painting this picture and will engage through many levels of communication and tests and reports, but the attacker will do it maybe within a period of 3 hours. And you have this impact happening in 3 hours. And so there's got to be a sense of how do we paint the picture of what can actually happen, but also bring it to the attention of those who need to know and those who need to move, because that's our job. And being able to do that consistently across the different pain points or the different key areas of the organization concern, that's where the auditors come in. That's where we have to perfect our craft. That's where we have to do the work, but also to enable and empower management to take more responsibility for risk management across the entire, not just technology, but also operations and other areas, and be able to raise the level or the quality of communication around this control gap. So might have to move to a level where organizations are empowering their first and second line teams to do more raising of such issues, as opposed to waiting for an annual audit or an annual pen test or any other sort of scheduled activity that does not surface some of these issues. Okay, looking at our audit plan that's defensible, we've got to tie it to the business. It's got to make sense to the business. It's got to matter to the business. It's got to be about the business. And in this case, the business is about the stakeholders, the clients, the suppliers, the staff, the stakeholders, the shareholders, the regulators. The business is made up of different stakeholders, and so we've got to understand their needs and how those needs are being met or being impacted by certain risk events or certain risk types. Risk statements are going to have to be in the language of the business. So we have to speak about things that the business cares about. A CFO speaks about money, the language of money. A chief operations officer may speak about turnaround time or turnover or whatever SLAs they have. The chief risk officer may be interested in compliance and regulatory concerns. So we've got to put ourselves in the shoes of management, look at what really drives them and their different areas of the business, and be able to then bring out risk in a way that will open their eyes and make them pay attention. Others will just be yet another report that has to be sort of handled somehow. It won't bring out the key issues that are close to the hearts and minds of business leaders, and can drive their appreciation of these findings, their trust that they will give you as an auditor, but also the resultant goodwill that will drive closure or resolution of some of these issues. Moving on, we also have the scope. What do we put in and what do we leave out? We've got to be very specific about what goes in. Prioritization is a very key exercise. It's not just what you put in, but what you leave out and what you choose to leave out and the reasons for that. We talked about the frameworks that matter to the organization. We also have the need for evidence. Now, evidence is a very interesting topic, but at the end of the day, our findings, our observations must be evidence-driven so that, or evidence-based so that there's no question about certain things. We cannot have two different views about the same risk. There must be common language and common understanding and demonstration to the point of we are on the same page so that the evidence then speaks for itself and cannot be shelved or cannot be denied. Okay, so let's just look at some artifacts that the organization might have. You might have a pen test report from the previous quarter or the previous year. You might also have data privacy assessments. You might have a risk register that the organization is using to run their internal risk management. At front line, on first line and second line, but we also have actual evidence of things that are happening. You know, these could be internal, sort of artifacts or an internal view of things. But when you have access or when you have a good set of complaint data from clients, that then tells you what your clients are facing in the real world. And so you have the real world impact being reflected in these fraud complaints. And that is really one of the blind spots that most organizations have. They tend to lock themselves out of what the clients are seeing, and they speak to them their own view and are not able to gain insight from these customer complaints. You might have a customer experience team, but then that is maybe going to find it hard to speak to this process. So there's got to be this bridge between what you have as your internal processes, internal data, internal understanding of risk, and what your customers are actually facing as a result of the strength or the weakness of the controls that you put in place. Okay, so in this case, some of these artifacts can be used as inputs. We can use them to score and sort of inform our understanding of what we want to focus on. But the point is that you have your candidate areas here, and you're trying to say, where can we get information from, and what can show us that if something is maybe highlighted in different artifacts, pen test, privacy report, risk register, fraud and incident, how does that give it weight in terms of it becoming maybe the number one priority? And so we're trying to do an evidence-based sort of discovery process to get a sense of what's going on in the organization from both the internal artifacts as well as data that's coming from your clients or external entities and giving you a view of what's going on. All right, as we come to a close, I think I just want to try and wrap it up. We shall have in the real workshop in September, we shall have a 2-day exercise, which does day one, looking at the planning with the case study and the risk-based walkthrough. And then day two, we shall look at field work and reporting. And that should give us a very packed but very intense and very realistic view of what we can do together as an audit function interacting with different entities, management, IT, vendors, and other risk and compliance support functions within the organization. So we'll also have things like the mock portal. We'll have sample data for the evidence that we want. We'll have sample data extracted from the AWS environment. We'll try our best to make it realistic so that from the risk register to pen test, privacy assessments, these artifacts help us to drive and build, real world scenarios that we can then use to inform our type of testing, and we come up with reports that will then give us a good sense of what a report should actually look like and how it can be used to drive action and impact for the organization. All right, so I want to bring it to a close. I think we leave some room for questions, 1 or 2 minutes for questions. I have seen some Q&A in the chat. Okay, we have a question. In the frameworks, how can we apply DORA and NIS2 with crypto transactions environment specifically is not embedded in governance documents? I think my answer here is that we would then need to look at how the organization is impacted by the requirements of DORA and NIS2, and then having looked at what the regulatory requirements are, we then map that with what is actually being complied with on the ground. And so there's sort of a gap analysis that needs to be done, obviously evidence-driven, and that then allows you to say, out of maybe 10 applicable requirements that must be complied with, we only have evidence that we are complying with 3. And therefore, these 7 non-compliance areas then give us exposure to not just the regulatory sanction, but also real world harm that can happen to us. So for me, it would be a gap analysis approach based on evidence, what DORA requires and what the organization is doing at the moment. All right. If we don't have any other questions, allow me to bring this to a close. I want to say thank you so much, and I look forward to seeing you in the training in September. We'll have 2 days, and we'll go through a lot of things together. We'll be able to also share reports, templates, worksheets, and different artifacts that we can use to get us through different types of audits while adding value and ensuring that our clients are able to have real impact and positive improvement from our audits. Thank you so much, and I look forward to seeing you in September. Thank you.